Halo, 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 halo. Tes, tes. Cek, cek. Apa. Pak Juliarso. Apa.
Rajang sore. Tes. Bali is an is an island of tourism that draws attention of the international world by its unique culture, nature and people. Bali is still a popular destination for people to take a vacation and a place for international events to be held. Bali is not just a tourism destination anymore, it is slowly changing into an educational destination for people to study abroad. And that is why we at the Faculty of Economics and Business at Udayana University have a target to become a world-class university in which can cover the demands of people who want to learn the economic and business study whilst attaining learning about culture and business traits in Bali and Indonesia. Bali is an island of tourism that draws attention of the international world by its unique culture, nature and people. Bali is still a popular destination for people to take a vacation and a place for international events to be held. Bali is not just a tourism destination anymore, it is slowly changing into an educational destination for people to study abroad. And that is why we at the Faculty of Economics and Business at Udayana University have a target to become a world-class university, in which can cover the demands of people who want to learn the economic and business study whilst attaining learning about culture and business traits in Bali and Indonesia. The Faculty of Economics and Business is the second largest faculty within Udayana University, and it is the leading economics and business school in Bali. There are two main campuses that accommodate students for studying activities, both local and international students, located in Jimbaran and Denpasar campuses. The Faculty of Economics and Business provides a range of management courses suited for bachelor degrees, master degrees, and doctoral degrees that focus upon three main concentrations of study, which are the Schools of Management, Schools of Accounting, and Schools of Economic Studies. Also, it provides a range of professional courses and short courses which are diploma degrees, accountant profession courses, IBSN or International Business System Network courses, and also night class courses. This is to ensure students are able to master the distinct field of studying that can create effective competitiveness within the current global business environments. The management courses specifically provide a detailed approach to how managing people, organizations, companies, and multinational companies from a unique cultural distinction based on Indonesia's proficiency and also adaptability to the ever-changing demand of global management practices. From this, the faculty has created specific educational programs that help to develop a deeper understanding of knowledge, practices, and also the evolution of competitiveness in comparison to other universities within the island, the country, the region, or even internationally. The curriculum at the Faculty of Economics and Business in Udayana University is designed to a level of education that matches current knowledge bases, technology advancement, and specific techniques that are applied in the current working environment. The studying program is distinguished into core subjects, concentration subjects, and elective subjects in which students can select freely. The credit points are distributed differently depending upon the unit's educational programs that the student selects. Information regarding the curriculum and specified credit point system that can be accessed online by students, staff, and the public through the faculty's official website. The education process is based on the structured curriculum that is re-evaluated and renewed every semester. The curriculum focuses in three core competent studies, which are management, accounting, and economic studies. The classes are taught by highly competent teaching staff with a minimum of a master's degree and doctoral degrees. And this also applies for guest lecturers that are from multiple of our partnering universities throughout Indonesia, such as the University of Indonesia, University of Gadjah Mada, and other partnering universities. Besides of the three core competent studies that students have learnt, there are three unique subjects offered specifically at our faculty which is not commonly offered at other universities, which are cultural economy, tourism economy, and local content entrepreneurship. The reason for this is because the majority of industries in Bali are mainly geared up for the tourism industry and agricultural tourism, directly and indirectly. Also, entrepreneurship is a knowledge and skill that future graduates need to become a capable and competitive human resource that can compete effectively within the local and also the international business environments. These unique options are offered as a vision of Faculty of Economics and Business of Udayana to become one of the frontrunners to attain a world-class standard faculty from its educational process, development, and continuous improvement. The Faculty of Economics and Business at Udayana University is continuously striving to enhance its capacity by accepting international students to study and attain graduate degrees, postgraduate degrees, and doctoral degrees. Currently, the Faculty of Economics and Business at Udayana University has catered to students from Japan, Thailand, Germany, Russia, Malaysia, and Timor-Leste, in which the Faculty of Economics and Business at Udayana University will continuously strive to increase its potential and capacity of teaching international students and exchange students to ensure acceptability of the program Bali is an island of tourism that draws attention of the international world by its unique culture, nature and people. Bali is still a popular destination for people to take a vacation and a place for international events to be held. Bali is not just a tourism destination anymore, it is slowly changing into an educational destination for people to study abroad, and that is why we at the Faculty of Economics and Business at Udayana University have a target to become a world-class university in which can cover the demands of people who want to learn the economic and business study whilst attaining learning about culture and business traits in Bali and Indonesia. The Faculty of Economics and Business is the second largest faculty within Udayana University, and it is the leading economics and business school in Bali. There are two main campuses that accommodate students for studying activities, both local and international students, located in Jimbaran and Denpasar campuses. The Faculty of Economics and Business provides a range of management courses suited for bachelor degrees, master degrees, and doctoral degrees that focus upon three main concentrations of study, which are the Schools of Management, Schools of Accounting, and Schools of Economic Studies. Also, it provides a range of professional courses and short courses which are diploma degrees, accountant profession courses, IBSN or International Business System Network courses, and also night class courses. This is to ensure students are able to master the distinct field of studying that can create effective competitiveness within the current global business environments. The management courses specifically provide a detailed approach to how managing people, organizations, companies, and multinational companies from a unique cultural distinction based on Indonesia's proficiency and also adaptability to the ever-changing demand of global management. The faculty has created specific educational programs that help to develop a deeper understanding of knowledge, practices, and also the evolution of competitiveness in comparison to other universities within the island, the country, the region, or even internationally. The curriculum at the Faculty of Economics and Business in Udayana University is designed to a level of education that matches current knowledge bases, technology advancement, and specific techniques that are applied in the current working environment. The studying program is distinguished into core subjects, concentration subjects, and elective subjects in which students can select freely. The credit points are distributed differently depending upon the unit's educational programs that the student selects. Information regarding the curriculum and specified credit point system that can be accessed online by students, staff, and the public through the faculty's official website. The education process is based on the structured curriculum that is re-evaluated and renewed every semester. The curriculum focuses in three core competent studies, which are management, accounting, and economic studies. The classes are taught by highly competent teaching staff with a minimum of a master's degree and doctoral degrees. And this also applies for guest lecturers that are from multiple of our partnering universities throughout Indonesia, such as the University of Indonesia, University of Gadjah Mada, and other partnering universities. Besides of the three core competent studies that students have learnt, there are three unique subjects offered specifically at our faculty which is not commonly offered at other universities, which are cultural economy, tourism economy, and local content entrepreneurship. The reason for this is because the majority of industries in Bali are mainly geared up for the tourist directly and indirectly. Also, is an island of tourism that draws attention of the international world by its unique culture, nature and people. Bali is still a popular destination for people to take a vacation and a place for international events to be held. Bali is not just a tourism destination anymore, it is slowly changing into an educational destination for people to study abroad. And that is why we at the Faculty of Economics and Business at Udayana University have a target to become a world-class university of people who want to make a business study whilst attaining learning about culture and business traits. The Faculty of Economics and Business is the second largest faculty within Udayana University, and it is the leading economics and business school in Bali. There are two main campuses that accommodate students for studying activities, both local and international students, located in Jimbaran and Denpasar campuses. The Faculty of Economics and Business provides degrees that focus upon three main concentrations of study, which are the Schools of Management, Schools of Accounting, and Schools of Economic Studies. Also, it provides a range of professional courses and short courses which are diploma degrees, accountant profession courses, IBSN or International Business System Network courses, and also night class courses. This is to ensure students are able to master the distinct field and create effective competitiveness within the current global business environments. The management courses specifically provide a detailed approach to how manage unique cultural distinction based on Indonesia's proficiency
That's all about Ibu Mimba. We give big applause to Dr. Mimba. Bu Mimba, time is yours until around 17.
Okay, Suksma, and thank you, Bu Rasmini. First of all, I would like to extend my greeting and wishes. Om Swastiastu. Assalamualaikum warahmatullahi wabarakatuh. Shalom, Namo Buddhaya, wishing of health, peace, and prosperity. Good morning to you and other colleges in Qatar. Yeah, we have you have 5 hours time difference, yeah, with Bali local time. And also a distinguished Dean of Faculty of Economic and Business, Udayana University. In this occasion is represented by the head of Accounting Department, Dr. Asri Dwijaputri, distinguished head of Institute of Indonesian Chartered Accountants of Bali Region, Dr. Wira Kusuma, honorable colleges in Bali. We have participants not only from Udayana University at this moment, but also from Undiknas, Unhi, Undira, Warmadewa, and other universities in Bali. And we also have some participants from other universities that come up from Java Islands that now joining in Cisco WebEx meeting and also in our YouTube live streaming. It is a great honor for me, Mimba, to be the moderator of this special international webinar. Before we going to listening to the presentation, please allow me to share further detailed information about our special speaker this afternoon. Professor Muhammad Al-Gamal pursued his PhD from University of Aberdeen and also from Yamazaki Gakuen University. He earned his bachelor degree and master degree from Suez Canal University. Next slide, please. Yeah. Okay. Now we have the information about a current position of Professor Algamar. He is an associate professor in finance at Qatar University from September 2012 until now. And he has 15 years teaching and researching finance and management. He was a senior lecturer in finance from University of Westminster from February 2011 until November 2012. He was a teaching fellow in finance in the University of Aberdeen from October 2006 until October 2011. He was also a teaching assistant in University of Aberdeen's Business School from October 2006 until February 2010. He was a lecturer in Menofia University, Egypt from July 1997 until September 2006. He was also an assistant lecturer in this university from July 1997 till August 2006. He was the financial analyst for Small Industrial Development Association from January 1994 until January 1996. So we can say here in Bali, today is a special day because we have the full moon ceremony today. And on this special day, we have our special speaker is going to share his interesting materials to increase our insight. The title of his presentation this afternoon is Price and Volatility Spillovers between a global financial market prior to and during the COVID-19 pandemic. Without any further ado, Professor Muhammad Al-Gamal, as the president of Asia Pacific Management Accounting Association 2020, we would like to give you the time about 45 minutes. So please give our big round of applause to Professor Algamar.
Thank you. Thank you.
The
Thank you.
time is yours, Professor. Yeah.
Thank you. First of all, I would like to thank my colleague and my friend, Professor Mimba, for inviting me for such distinguished event. I'm very happy to be here. Actually, I know Professor Mimba a few years ago from the ABAMA, Pacific Management Association. She is a very active board of director member. She always add a lot of values to the association. And I would like to take this opportunity to invite all of you to attend our next conference, which will be in Jakarta. So from Bali, it will be in Jakarta next year, 2021. I think it will be in November, early in November. I think Professor Memba is a member of the organization committee, so she knows more than me about the time. Also, I would like to invite you to participate in the ABAMA webinars. We have spring webinars and we have also summer webinars. I will share with you had done international economic lockdown. And this international was in everywhere. And this hit firms' cash flow, consumer spending, economic activities, employment, economic growth expectation. And this turmoil has increased investors' uncertainty, which in turn affect financial and commodity markets return and volatility all over the world, not in specific. Okay, so this is why we have choice this data. And as I mentioned before, our data is from 2015 until 2020, 15th of May. Our main variables, as I mentioned before, are three markets, and to capture this free market, we choose the clothing prices for the Standard & Poor Global Crude Market Stock Index as a proxy for global equity markets. We also use the CSCI Gold Index as a proxy for gold market. And finally, we use the GSCI Energy Index as a proxy for emerging markets. This nice graph shows you actually the behavior of the three markets from 2015 until the 15th of May. And you can see very clear here, I'm sure you are able to see. Yeah, very clear what happens in the coffee. You can see the green one, actually, which is the energy index, fall down. Also the blue one, which is the stock market index, has dropped. However, it's recovered after March, a little recovered. And you can see the fluctuation in the orange one, which is the gold, is not so bad compared to the other two markets. So the methodology. Actually, we have to be very careful about our methodology, because we know there is a lot of co-founders between the three markets. So actually, that means there are many factors which affect the three markets. We need to do what we call it orthogonalize to the data, and this is actually a very common methodology. And if you need any details about paper, I can send the paper itself to you, to Professor Member. I don't mind to share. And I think also the paper is available in my account in ResearchGate, and also my account in SSRN. So you can find the paper in my account in ResearchGate. You can just search my name in ResearchGate, and you will find the paper, and you can download the paper. And I think the paper contains more details than what I'm discussing with you today. And I'm open to have any feedback or questions related to this detail, especially from our PhD students and master students. I know that sometimes the presentation doesn't give you enough details about the technical and methodology aspects. So we have multi-stage methodology. The first stage, we control to the main common driver for equity, gold, and energy market. And these drivers, we choose some drivers which are very common in the literature. For example, United States Trade Weighted Exchange Rate Index, US Option Volatility Index, China Volatility Index, and Bitcoin Price Index. This orthogonal practice is to eliminate omitted variable bias. In addition, the two markets under investigation are also orthogonalized on the third market. In the second stage, we applied a set of multivariate Garch models to investigate the spillover in mean returns and volatility using the residual from the first stage. So this is the first stage regression, just OLS1. You will see here that we have 6 equations because actually we run every market twice in the other market. For example, to orthogonalize the stock market, we run it. We have 2 equations. The first equation, we run a stock market on the leg of the energy market and gold market, the second equation, and also in the leg of the 4 control variables, as I mentioned before, the United States trade, the volatility index, and the Bitcoin index, and Chinese index. And we repeat the same practice for gold market and also for energy market. Every time we run one of these markets on the other market, and we take the residuals, these residuals, we move them to the next step. Yeah, this is the next step. In the next step, all predictors or residuals has been lagged again in a single period to alleviate concerns over endogeneity and multicollinearity. So we use AR process model for this actually to be sure that we remove any multicollinearity or endogeneity. So what we have done, we take the residual for the previous steps, we rerun the residual in their first legs, and actually we will take the residuals of the new AR process, and these residuals will be used as regressors inside our regression model. So actually the last product, this is actually what we can call it sigma for GT, sigma for S20, S2T. These are the product of the uncorrelated residuals, and this uncorrelated residual has been taken from this process to the third process, and actually we utilize them to examine mean and volatility transmission between equity and gold and energy markets, since both series are now widened and independent of energy and gold and other control variables. And we repeat this process for the 3 markets, and we use archaic information creation to choose the leg. After that, we run a system of Garch model, and the system of the Garch model, the second step, this system will be used based on the residuals taken from the previous step to capture the dynamics of cross-market return and volatility transmissions. And this methodology allowed to us including and to consider stylist facts observed in our series, including heavy tails, volatility clustering, and nonlinear dependence. So what we have done, we're taking January 7th of 2020 as an event date. We investigate whether certain exogenous events, which is COVID-19 disease, alter the nature of the interdependence structure between markets over 2 non-overlapping sub periods of equal length. So that means actually our event is COVID, January 7th, and we have 2 symbols before and after. They are not overlapped. The first one labeled as the pre-pandemic, which is extend from 20 August 2019 to 6 January 2020, and the second one, the pre-pandemic, the second one, the after pandemic, started from January 7, 2020 to May 2020. As indicated by Buer and Lucy 2009 and Jan and Das, this modeling approach helps to reveal how investors behave over shorter crisis. We use also 2 multiplicative dummy variables, D1 and D2, Actually, they are assigned as value 1 during the designated pre-pandemic and pandemic period, respectively, and 0 otherwise. So D1, take the value of 1 if the observation lies in the period before pandemic, and D2 will take the value 1 if the observation lie in the period after pandemic, otherwise you will be there. This is the conditional mean representation. We know that the Garsh model contains two equations. One equation for the mean, which measure the spillover between the return itself or the prices itself. And we have also the conditional variance equation, which measure the spillovers between the volatility. So we measure two different spillovers. This is the mean, the conditional mean representation equations, which measure the spillover between prices and returns. So this is the residuals versus market, and this is, for example, here alpha 10 and alpha 20 is just long-term derivative coefficients. Alpha 11 and alpha 20 and alpha 12 and alpha 13. And similarly for alpha 21, alpha 22, alpha 23, measure the cross mean spillovers effect from market B to market A and vice versa, of course, over the whole pre-pandemic and pandemic period. Remember that D1 for the pre-pandemic and D2 for pandemic. So to check whether cross-market spillovers during the pandemic period are statistically different from those of the pre-pandemic one, we examine the null hypothesis that alpha 12 equal alpha 13 and alpha 22 equal alpha 23. See if there is a difference between them. So this is the main conditional mean. The second part of Garsh model is the conditional variance. And in this case, this is the variance of the mean. The sigma 1 here is the variance. You can see here, this is the variance. And beta 10 and beta 20 is just constant. Beta 11, 12, 13, and of course, similarly, 21, 22 denote the sensitivity of conditional variance of market A to its own arch and Garsh effectives. And beta 15, 23, 24, 25 measure the magnitude of cross volatility shocks from market B to market A over the entire sample period. And B25, B15 measure there is a difference between pre-pandemic and post-pandemic period. The finding. I didn't share my tables here because you know the Garsh tables usually very big tables and they are not actually user friendly. But again, I'm very open to share with you the whole paper, including tables and everything. Again, we have 3 different channels we can use to share the papers. You can download my paper from my account in the ResearchGate or SSNR, or I can send it to Professor Mimba and she share with you. I'm very open in this direction.
Yes,
So I can send
thank
it by
you.
email. Yeah, well. We observe. Let's do the findings. What are the main findings we have found? I will divide my findings to the mean spillover, which is mean that the relationship between prices in the 3 markets, and volatility spillovers, which mean the relationship between the risk in the 3 markets. If I start by the mean spillover, we observe a positive mean spillovers from gold to stock markets over the entire sample period. Hence, gold price changes appear to carry important information about future price movement in global stock market, but other way around doesn't hold true. So that means in the whole entire period, the gold prices changes affect the stock market, but the stock market doesn't affect the gold market, which means that the gold can work as a safe haven and as a hedge strategy against stock market in the whole entire time. However, in the pandemic period, the cross market returns are negative in sign and distinguishable from zero at conventional level. This finding implies that with the onset of the COVID-19 disease across the world, there is a price interdependence between equities and gold, where past negative returns in either market positively affect current return than the other. Besides, the cross-mean transformation from stock market to gold is somewhat large magnitude than the opposite case. What does this mean actually? This means both markets affect each other. What happens in the stock markets affect the gold market, and also what happens in the gold market affect stock market. However, the impact of stock market on the gold market is bigger than the impact of gold market on the stock market. So that the transformation from stock market is bigger. So it looks that maybe the gold wasn't really a very good safe haven during the pandemic, according to this result, at least in regard to the prices. Our research suggests that gold can function as a rather weak hedge against equity market downturns during the overall sample and the pre-pandemic period, while it can serve as a strong safe haven under the shadow of novel coronavirus. The wall type test statistic confirming that the sensitivity of either market to collect return spillover from other one is significantly different between pre-pandemic and pandemic periods. Concerning the gold energy market, we detect mean spillovers in both directions over the full sample period. It is clear that past return in energy market excrete imbalance in current gold market return more than twice as large as that other way around. So that means the energy market has double effect in the gold market. Why? I think we can understand what happens in the energy market from the energy war in last April and what happened when the market, the oil market dropped to $20 per barrel and forward contract prices turned to be negative prices. With the onset of the COVID-19 outbreak, we observed statistically significant unidirectional mean transformations from energy to gold market. So during the feed, the energy affect the gold market. For the equity market nexus, we find the positive return interdependence over the whole period, with the sensitivity of current stock returns to past energy returns being much greater than that of other way around. In the pandemic period, we observed unidirectional return spillover radiating from energy to stock market. So in the pandemic period, we can find that energy affects stock market. The energy market has been impact, and again, because the big crash was I can see there is a lot of questions coming in the middle of the. I will answer this question. Actually, I will try to answer this question, to be honest with you, in the question and answer session. So sorry for that. The second group of findings related to the volatility spillover. Actually, we find that the shock and volatility spillovers become more pronounced in the wake of the COVID-19 pandemics. For the full summer period, there are modest bi-directional cross-shock effects between equity and gold market. Both of them affect each other, along with unidirectional shock spillovers from equity to energy markets and from energy to gold market. Under the shadow of the global health crisis, we detect large bidirectional shock spillovers between equity and both of energy and gold market. and the gross shock spillovers from energy to gold market. Importantly, energy markets appear to have substantial cross volatility spillover impact on our market, most probably due to the recent oil price decrease. To summarize the finding, the most important finding, under the COVID-19 regime, we find bidirectional return spillover, a conflict between equity and gold markets, and unidirectional spillovers from energy to equity and gold counterparts. So that's mean actually the relationship between equity and gold is bidirectional, both of them affect each other. The relationship between energy and the market is one direction, they actually affect the two markets. And this result is different from the pre-pandemic period. So we suggest this result suggested that the presence of large reciprocal shock spillovers between equity and both energy and gold market and cross-section spillover from energy to gold market, most probably driven by the recent oil price collapse. Energy markets appear to have substantial gross volatility spillovers impact on the others. The most implication we got from our study, the pandemic and its consequential adverse impacts on energy markets dynamics, suggests that the safe haven characteristic of some investment asset class is likely to change over time and therefore should be periodically assessed.
Excuse me, Professor Muhammad. Yeah,
yeah.
You have still 5 times. Yeah, okay. 5 minutes. Yeah, thank you. Yeah.
Okay, thank you.
Yeah, thank you.
This sustained assessment is a crucial input for the development of appropriate hedging strategy, risk management practice, and optimal portfolio structure. So I had done already. Thank you for your time. And I will open, now I give the microphone to Professor Mimba. Thank you, Professor Mimba.
Sorry, I was informed you that you still have 5 minutes. So if you still have something to share, please feel free to use this time.
No,
You already finished? Okay, just in time.
Yeah, this was my last slide, by the way.
I see. Okay. Yeah. Thank you so much. So wonderful. It is a very interesting presentation. Please give our big round of applause again to Professor Muhammad. Okay. So we still have about 465 participants this afternoon, Professor Muhammad. So it's really say thank you to all of the participants who are still joining this event. Now we proceed to the next session. We call it a discussion. So for this, our IT will be sharing the slide of the presentation with the questions. Yeah. Please share the questions. However, for this session, we also, if possible, to invite the persons who would like to raise this question directly to Professor Muhammad. The first one, I would like to invite Dr. Iputu Sudana to raise a question directly to Professor Muhammad. Mr. Putu, the time is yours.
Okay, thank you, Putu Mimba.
Yes.
Prof. Muhammad El Gamal, how are you?
I'm fine, thank you.
Okay, good evening, good morning, Qatar time.
Good morning.
We met each other at APMA, Japan, actually.
Yeah.
When you did presentation for Qatar hosting.
Oh, yeah, I can remember that. Thank you for remembering me for this.
Professor El Gamal, as we know that COVID-19 pandemic deteriorating hits all aspects of our economy. So would you please share with us what happened with Qatar financial markets? How bad is this pandemic
this is a very nice question. Yeah, this is very nice
Please
question.
go ahead, Prof. Yeah, thank you.
I would like to answer this question. Before I start, I have to say something about the Qatar financial market.
Yes.
The Qatar financial market is a small market. It's not a big market. I mean, the number of companies is 46 companies only. And already we had something called the political blockade before the pandemic. when we have there is a political tension between Qatar and a few neighbors, the major neighbors, Arabia Saudi and other countries, and this affects the stock market very severely, because actually a huge number of investors coming from these countries. I mean, usually, you know, in the Gulf, people from the Gulf are traded in other Gulf markets. So if you are from Kuwait or Qatar or Dubai, you are investing in different markets to use diversification, because you know about the culture, and you have many investment in other countries. So the market itself has been affected, and the volatility increased after the blockade. However, when the global crisis started, the financial markets has responded moderately, I would say, better than other global markets, because actually we were in a whole market, so the prices was already reduced. So the movement in the market, especially price index, wasn't that bad. And I think I have done last summer a presentation about this. Even the impact was in different sectors. So some sectors has been affected dramatically, and some sectors has gained some return. For example, I can share with you that the health sector, prices in the health sector increased. Consumer sector has been enhanced, because actually what happens during the crisis, everyone is staying home and start to consume, and you know, the technical and online shopping, and the new there is a new markets for digital markets started again. However, construction market and oil and gas market has affected very severely. So it was a good time for investors to reallocate their financial choices. The currency market, the good news that the currency market was stable, because usually, actually, Qatar following a big policy. That means the Qatari riyal is pegged to the dollar, United States dollar. So the currency against US dollar was stable. However, we affected by the changes in the US dollar to another global currencies. So actually, if I look now to the Qatar index, if I would like to calculate total return on the index during the last year, I will see that the index has a positive number, but very slight positive number. So it go down, not too far, and recover not too far also. So we are still actually moving around the random walk theory. That means we are moving around the mean itself. So this is what happened actually in Qatar financial market. But however, I have to say also that most of the players in the Qatar financial markets are financial institutions. That's why the market move, and some of these financial institutions are governmental financial institutions. That means they are backed by the government. So that's why actually the market doesn't swing a lot compared to open financial markets like US or UK market. I hope this answers your question.
Clearly,
Yes.
Rob. Thank you so much. All the best for you.
Thank you. Thank you.
Thank you, Pak Putu, and also thank you, Professor Muhammad. Now we are going to the second question. So it seems that lots of questions here. So we now selected 5 questions first. So the second question is come up from Dr. Asri Dwijaputri. So Dr. Asri, do you would like to raise a question directly? Oh no, because it seems the technical glitch. Okay then. I think Professor Muhammad, we just have the question here. How is COVID-19 affecting Qatar industry, especially in organization life cycle that includes maturity, growth, revival, birth, and decline? Is it speed up this cycle? So could you please explain it in further detail? Thank you.
Thank you. I would like to thank Dr. Asri for this deep question. This is very deep question, actually, to be honest with you. Again, I think the impact of COVID-19 on the industry, especially in something like organizational life cycle, is different from one sector to another sector. So, for example, I can see that in some volatile industries and also in some prominent industries, the life cycle has been changing dramatically. For example, in the health sector and the health service, like producing gloves, producing masks, producing alcohol, all this kind of things, healthcare things, the organization's life cycle has been pushed very speedily from birth to growth. And of course, I don't think we reached maturity yet. So what happens actually during the COVID, the government encourages kind of organization to establish new factories to produce alcohol, hand sanitizer, gloves, masks, and all of these things. However, also, I think the COVID-19 refined organizational life cycles in other sectors. What I mean by refined, actually. For example, in the construction, first of all, the construction stopped, the construction industry. And it looks like actually the construction industry, I mean, most of them was in the maturity stage of the life cycle because Qatar is very near to finish all constructions related to the World Cup. I think the whole country has been reconstructed. Roads, stadiums, new cities, all things. So we are in the maturity time. I mean, there is no a big opportunity growth for more constructions. However, with the COVID-19, the challenge was actually, if you are going to lock down, how can you complete the work? How can you actually, if you have a huge number of employees, how can you keep paying these employees the same salaries, which is quite higher compared to other salaries in different countries, and they don't work actually, and you have a contract. So this actually creates a lot of pressure on such construction and industrial and gas and oil industry. These four sectors has been affected dramatically because they servers, they have a very clear reduction in the cash flows in case of the oil and gas because of the oil price. They have a severe reduction in the government assist. They don't have any new project offered during the lockdown. So they have a problem and they still have to pay for their labor. I think this actually speed up the moving from maturity to decline cycle for most of this. So that's why in last year we see a lot of organization disappear from the market. However, a strong organization keep their position and was able. That's why I mean that the COVID-19 refined the organization. The strong stay, and unfortunately, weak organization has to go out from the market at least, or to decline their activity as an alternative. I hope this answers your question. Thank you.
Thank you, Professor Mohammed. Now we come up to the third questions. I just got the information that Mr. Wahyu cannot raise a question directly due to the technical glitch, but we are lucky that we have our other colleagues, Mr. Krisnandra, who will raise a question to you. Please, go Krisnandra. Yes, please, raise up the questions.
Thank you for the opportunity to ask question for Professor Muhammad. My question is what is the key element for recovering volatility during the pandemic outbreak? Thank you.
Okay, this is a nice question. If I understand the question, why the market has been recovered, what drive the market to recover it? Recovering volatility. I think, yeah, he mentioned what actually refused. Yeah, yeah. I think There are many reasons, but the most important reason, we cannot pay the bill. The financial market has dropped, and the economy in different countries has dropped. And we know that if the market drops, what does this mean actually? The prices go down. So that means actually we can buy now in a huge amount, and we can push the demand to increase the price again. Because nobody can pay the cost of a financial crisis for a long time. The system itself allow for, I mean, the free market, the capital market allow for demand, supply, and main prices, and absorbing shocks and volatility. However, this can be worked for a limited period, but nobody can pay the bill of long time crisis. So I think what happens usually, financial institutions and central banks allow for easing monetary policy, giving a lot of bailout to push the economy. This allows for a low cost of finance. So financial institutions start to use this low cost of finance to finance their trading in financial markets. And actually the return or the expected return on the financial markets in the COVID increase because actually the prices go down. So the expected return increase, and this is encourage financial institutions to rebuy against stocks, and this push up the prices. This is actually was very planned. There are many reasons. I think I have a study about this actually. There are many reasons why we cannot allow it actually to the stock market to decline forever, because this means actually the firm values were going down. This increase the cost of capital. This is decrease the investor wealth. This is create financial panic. This is kicked out our investors from the market, and we need them. Otherwise, the economy will collapse. So nobody will allow for the financial markets to crash for a long time. We can allow, the system can allow to crash for 1 month, maybe 2 months, but not for a long time. So that's actually the bailouts granted by different governments encourage investors to invest again. The liquidity has been injected in the market through financial institutions, and the interest rate was almost zero in most of the countries. I mean, you can get the money for something like 0.00 something. So the money, the hot money, come back to the market, and this encourage people. And of course, a lot of investors try to compensate for their previous loss. So I believe that the market has been bring up again by governments and financial institutions.
Okay.
Hello? Yeah?
Yes. Okay. So thank you for the answer of the questions from Dr. Asri. And also from, sorry, that one is from Mr. Wahyu.
Wahai. Yeah.
Yeah, Wahyu. Yeah.
Wahyu.
Professor Muhammad, it seems we got a lot of questions here. At least now we have about 7 questions. I hope we could finish it. Otherwise, all of us will fly to Qatar.
Okay, I
to
will
get
try
more
to get some
more
questions.
insight from your side, or for sure that next year we would like to invite you to come to Bali. Yeah. Now we have the 4th questions. I just also received the information that Dr. Eka could not raise a question directly, but now we have another colleague here who willing to raise a question to you, so the audience will not get bored to see only my face. Okay. Now, Mr. Andika, could you please raise the questions?
Thank you, Bu Dr. Mimba, and also Prof. Mohammed. I represent Dr. Eka Ardani asking the questions. About the stock price and volatility spillovers, you have explained that it affects not only equity, but also gold and energy market. How is it connected to exchange rates? What is the implication to global portfolios, especially in deciding diversification strategy during the pandemic periods? Thank you very much.
Thank you for this question. This is very important one, actually. I will start first by the exchange rate market. Previous studies, I think it's called Corbett 2020 has found no relationship between exchange rate markets and other markets during the pandemic period. What does this mean actually? The exchange rates doesn't change very severely during the pandemic, and the reason is very clear. I mean, let's exclude China from the equation because China started earlier and finished earlier. But if we focus on the other main currencies like United States dollar, euro, pound, Japanese yen, whatever, why this exchange rate doesn't have a major change or at least a trendy change? Because actually this pandemic was a global. It doesn't affect specific country. It doesn't affect the economy of one country or one region. It was a global one. So this doesn't remember that the exchange rate is just a relative pricing. It's a currency against other currency. If both economy has been affected in some way, we don't expect to have a huge amount. Anyway, the empirical analysis show that there is no relationship during the pandemic. The second part of the question is very important: the relationship between energy, gold, and equity. How this impacts the global portfolio. Actually, the negative relationship between gold and equity should, because we find the negative relationship between gold and equity, and this was expected, of course. Yeah, it was expected. If the prices of the equity go down, investors would like to move to the gold market, and this increase the demand in gold, and this raise the gold prices up. This negative relationship actually will encourage us to advise global investors when they build a global portfolio to contain equity and gold in their portfolio. Regarding the energy was very volatile assets during this time period. However, if you are using gold as a safe haven and you have less volatile gold, it would be a good strategy also to contain risky assets like energy commodities, because you know, if you have a risky asset, that means you have higher expected return. So for global portfolio, it looks like in the pandemic period, the good portfolio should contain equity and gold. And regarding FX or exchange rates, we don't have a conclusive advice about it. Regarding energy, it will be based on your risk ability. If you are a risk lover, you can add it and take more risk to take more return. However, this relationship is different from time to another time. What is the main result from our study? That you have to recalculate, you have to re-estimate the interdependence relationship between markets, because it looks like this interdependence relationships change from time to another time. Thank you.
Thank you, Prof. Mohammed, for the insights.
Thank you, Andika. So we come up to the fifth question that come from Professor Wayan Swartana. Professor Wayan, would you be possible for raising the question? Yes, please.
Ready. Okay, thank you, Bu Mimba. Good afternoon, Prof. Mohammed.
Good afternoon.
Okay, now all countries focus on domestic issue, handling the coronavirus, and Indonesian policy. In Indonesian context, the issues of regulation, peraturan pemerintah pengganti undang-undang, apa ya bahasa Inggrisnya itu, PP number 1 2020, to the stability of financial and then to the stability to market. And then what is this indication of the globalization trend, including the stock market? including its stock market in Qatar? Thank you.
Thank you, Professor, for your question.
Yes.
This is a very important question. I totally agree with you. Localization has been started even before the corona with Trump plans, focus in local economy, and this and the similar in UK plan to opt for the European. I will agree with you. This is actually a trend of deglobalization, but I will not agree about the deglobalization of stock market. I mean, maybe in other market sectors and other economy sectors, yeah, the focus will be in the internal. Actually, for the stock market, we know that we have the global investors, and the global investors, mainly financial institutions, has different agenda from the governments. I understand that different governments try to push financial institutions and main economic players to play for the benefit of domestic to be able, because we are in a pandemic, and it's very clear that every government will be keen to prepare a special package to overcome any economic difficulties and to help small business, to help projects, especially state projects and whatever. This is actually main focus on the local production more than exports. This will affect the international trade, international finance. However, in the stock market, the story will be big different, because we still have the big player in stock markets are financial institutions, and most of them are private institutions. Most of them are multinational companies who has to adopt global portfolios to reduce their risk. They are dealing with a huge amount of money, and I cannot predict that they will utilize this huge amount of money in one market. This will be very risky for them. And to be honest with you, the hot money going in and out from different stock markets play a vital role in the stock markets, and they enjoy the play. They enjoy the game. The financial institutions enjoy the game of pushing hot money in one market and take it out from other markets, so they can create abnormal returns all the time. And it is very difficult to create such abnormal returns if you focus your investment in one market. So I would agree with you about deglobalization in economy in general, but not in financial market, not in the stock market. Does this make sense?
Okay,
Yeah.
thank you, Prof.
Oh, thank you. So, Prof. Ayan, if you still have something to be discussed with Professor Muhammad, you could invite him to come to your coffee shop
Yes,
next year. While enjoying a coffee.
Okay, the globalization is a trend issue now.
Yes, okay.
The globalization is trend issue. Yeah.
Of course,
Thank you.
totally
Thank
agree.
you for your questions. Yeah,
Okay.
Professor Muhammad, we still have some questions on the slide that's going to be shared by our colleagues. Could you please wait few seconds?
Yeah, I will wait, but do you mind that I will bring some water?
Yeah, please.
Give me a second.
Yes, of course. Yeah. Yeah. While waiting, I just would like to ask Dr. Wirakusuma, are you keen to raise a question directly?
It's okay.
Okay.
All
Yeah.
right.
Just wait
Thank
for
you,
seconds, yeah?
Budimba.
Okay. Just to check.
Yep.
Yeah.
I'm available.
I need a glass of water, Peter.
Okay.
I'm available. So you can ask.
Okay. Here we are. Thank you. Yeah, I think indeed Professor Wayan perhaps already prepared a cup of coffee for you in his coffee shop, but this is virtually. So
Actually, I enjoyed nice. I enjoyed the Andalusian coffee when I came to Bali. It is very, the taste of the coffee is very near to the Turkish coffee. You know, in Arabic
I
countries,
see.
we drink Turkish coffee. Your coffee is strong and nice. Yeah, I like it very much.
Okay.
Balik,
You could try it
balik this
next
kopi.
year.
Yeah, I should come.
Yeah, you should try it next
You
year.
promised you promised to book 1 week in Mali for me, is it?
Yeah.
Okay. Okay,
Yeah.
now we are ready for the next questions. So, Dr. Wirakusuma, the time is yours.
Okay, thank you, Ibu Mimba, for the opportunity. Good afternoon,
Welcome.
Professor Muhammad Al
Good afternoon.
Gamal. I'm sure that your time is already afternoon now. Okay, have you heard my voice, please?
Yeah.
Yeah, okay. Based on your explanation before, you already showed the figure about the volatility of the gold, energy, and then equity. And then I'm sure that you already reflection about the sensitivity of the market. Actually, this is a different kind of market and different kind of the country either. And so you need many control variable because you use some index reflection on the 6 equation that you used before and tested. And I would like to know about how to identify the control variable refers to the driver of the equity, gold or energy market. I mean, for the minimize of the bias of the test. I'm sure you know, you already got the main idea of the question.
Yeah, I understand. This is a very important question, it's a very technical question. Thank you.
Based on the methodology approach. I mean, to make sure about the result of the test. Thank you very much, Professor Mohammed.
Yeah, welcome. I can share with you again the slides. I think I mentioned this in the first slide. I'm not sure. Do you mind, member, to share the slides again to show the Professor Mehdi the answer?
So you would like us to share the slide?
Yeah. I will share my slides again if you
Oh,
don't
you
mind.
will share your slide. Okay, then could you please stop the slide? Yeah, please just take your time.
Yeah. Because what we have done actually, Professor, we choose first of all I know that every market has different factors that affect the market. So we may have omitted variable bias, and this is a big problem. So what we done to avoid such okay, so it looks like that. Oh. Okay, no problem. I cannot share the slides for some reason, so I will answer without the slide. Anyway, what we have done for this actually, first of all, our first stage, we pick up 4 control variables. Why we choose these 4 control variables? As you remember, our main variables are global variables. I mean, we use 3 global indices, not specific for specific country. So the global stock indices include the main, its index includes the main firms, main companies around the world. And also, the gold index and the energy index is a global index. It's not actually a local one. It's not related to specific market.
Yeah.
So we have to choose also control variables which show in the literature their ability to capture the behavior of global markets. That's why that's why we choose the 4 control variables which has been documented in the literature. I will share with you my paper. You can find like 50, I think more than 15 studies used these variables, including the US trade. Because this is the main variables which affect the demand supply, the global demand supply, the international trade one, the FX one, which all actually again play important role in especially in the energy market. We use also the Chinese one because the Chinese one in the last 15 years play an important role in trading. And we use also this one. We use also we use a China volatility index, and we use also Bitcoin price index. Why these four variables? Because these four variables has been used a lot in the literature and has been proved that they are able to predict the global stock market and the energy market and the gold market. However, this wasn't enough. To be sure that we reduce the bias, we apply orthogonal practice. What is the orthogonal practice? We run our mean variables not only in these four variables, but also in the other markets, because we know that there is some factors in other markets maybe affect. So, for example, if I would like to understand the stock market, I run the stock market in the energy market and in other control variables and the lagged variables, and also I run the stock market in the gold market and other factors. I take these residuals, and to be sure that I consider all other factors which I don't know, I run my residuals in the first leg of these residuals. So what happened again? I run the residuals from the first stage on the first leg of the residuals to eliminate any multicollinearity or endogeneity coming from other factors which we don't know it. And now I take the second set of residuals. So that means actually I have three stages, it's not two stages. The first stage, control variables and other markets, has been regressed on one market. After that, the residuals of this market has been regressed over the lag of these residuals. And now the residual, the third one, has been taken in Garch and mean return and conditional variance equation. To best of my knowledge, this was the best methodology we can do. But however, I'm very open if you have any other suggestion which you believe can enhance our work, because it's still, of course, not published. It is under review now, but I'm happy also to include if you have any other recommendation. This would be a pleasure for me to apply.
Yeah.
I'm very open for this. Thank you, Professor.
Yeah, thank you very much, Professor Jamal. I would like to ask about the complete article or journal that you have before in order to make good issues for the next research, because many kind of issues that will come from or based on your research before. Yep, thank you very much, Professor.
Thank you. I will share it with you through Professor Memba.
Yeah.
I will hear the full version. It's a pleasure. It's a pleasure. It's an honor for me to have you reading my paper. Thank you.
Yeah. Yeah. Thank you very much. It's a nice for you.
Thank you.
Thank you.
Thank you.
Thank you, Dr. Wirakusuma, and also Professor Muhammad for answering the questions. Now we have another questions from a students. So I hope you already could see the questions. But first of all, I would like to invite Ryan Ananta, because he's from Bali, then Rian Ananta. So sorry, Rian or Ryan, yeah, Rian. Rian, would you be possible to deliver your questions?
Hello.
Hello.
Yeah. Thank you, Professor Muhammad, for the material that has been delivered. So I ask you about how does the power of gold compare before the COVID-19 pandemic and after the COVID-19 pandemic to hedge the equity market? Thank you.
Okay. Thank you. This is a very nice question. I can divide the impact or the role of gold as a hedge for three different periods. For entire sample, yes, the gold work as a good hedge against equity market. It's not so good, but it works. Because the relationship wasn't so strong. In the pandemic, in the first phase of the pandemic, it worked very good. It was a strong safe haven. It was a strong hedge because we have find a negative relationship between the two markets. And of course, if you have a negative relationship, that's reduce the risk. And this is good for your portfolio. In the second part of the pandemic, in the last 2 months, we find that the relationship turned to be weaker. It's still there. It still work as a hedge, but it just get weaker because we have some fluctuation in the gold market itself because of the lockdown. However, in the whole pandemic period, yes, the gold work as a good hedge strategy against equity market. Thank you.
Yeah. Thank you, Professor Muhammad. Thank you also, Rian, for your question. Now we also have another question, Professor Muhammad. Could you please share it? Yeah. The next question is from Nani Noviari. Nani, could you please raise your question directly to Professor Muhammad, if it is possible?
Yeah, thank you, Ibu Mimba.
You're welcome.
Okay. Good morning, Miss Professor Muhammad.
Good morning. Hi.
It's really nice to hear your presentation. It's give me a new perspective about the financial market, especially about for the golden market. But I just really want to ask for the question, but apologize if this question is not really relevant with your paper. But I really want to know because in Indonesia, especially in Bali, most of the business that really get impact for the pandemic is tourism, and because we try for the new normal, as far as I understand, that they try for this sector, try to open it and try to do to implement the appropriate healthness protocol and everything, but it's really costly. So the impact is most of the big villa, big hotel still decide to close their business. So a lot of a person not be hired, still unpaid leave, something like that. So the impact is the gross domestic brutto of the tourism is really low. I just really wanna understand how about the situation in Qatar. So maybe I just try to get an idea for the comparison. Thank you very much.
Thank you.
Thank you, Nani. Yeah, please. Yeah.
This is very interesting question, Nani, actually. Unfortunately, we have the same situation. The tourism industry is facing a big problem in Qatar. The reason, actually Qatar was looking to move from one sector economy to multi-sector economy. So they encourage tourism, and they have a very good program. I think, Professor Memba, you visited us in Qatar, in Doha.
No, but I was in Qatar in the previous years. Yeah, and also visited some hotel there, but not last year, but in the previous years.
Okay, so I think they have a very nice hotels and very nice tourism destination. But the problem actually that Qatar applied very restricted traveling policy during the COVID-19. So even for some people like myself who are resident in Qatar, I'm not a Qatari citizen, but I'm resident. It is a risky if I go away because they actually apply very restrictive policy if you would like Qatar to think that they have a list of countries and you say this is a safe country and unsafe country and you have to stay in the hotel for 1 week. And that's actually make most of the hotels close their doors during the pandemic. And even after releasing some of the restrictions, the hotel starts to come back to work, but people are afraid to go to hotels. And actually, people from outside Qatar, the number of visitors has going very low because now people don't travel anymore like before. So this actually push different hotels and business to reduce their prices. And however, the business itself doesn't work as good as they expected. However, the government find a way to help them by asking people who are coming back from outside Qatar to stay at least 1 week in a hotel as a quarantine. And you have to pay for your quarantine. However, I can see from the prices that this prices is like 1/5 of the average prices before before the pandemic. So, for example, assuming that the hotel average is $50, now you are paying maybe $50 or $50. I didn't do any research yet about the impact on tourism sector, but I think they have been affected very severely, and they didn't recover yet. And I believe this sector will be the last to recover. I even heard that the ticket price for air flights around the world now is very low. It's not only in Qatar, in every country. I think it's easy. I can see some advertisement for British Airways, for example. You can travel from UK to United States, $200, something like this, So it looks like that travel companies, hotels, air flights, all are suffering currently, unfortunately, in all countries. Thank you for your question.
Yeah, thank you, Professor Muhammad. I think it's a very interesting information, and also just reflecting from your background slide, it reminds me of a very beautiful scenery, especially in the evening. So I think, as you said, that if we would like to do some research that related to tourism that just asked by Ibu Nanik, then we could just come there, yeah, by
This is actually
compiling some information.
Yeah, this background is Doha at night. This is most of these buildings are hotels, so you come and stay in them.
Yeah, and the quality of the hotel was very excellent, elegant. Yeah. Okay, then now we still have one, the last but not the least question. So in total we two questions. Okay, now perhaps just a very short and briefly question. Now we have a question from Nanya Oktora. Yes. Could you please just upload it, share it, the questions?
I have shared question.
Okay, yeah, thank you.
Okay, thank you for the opportunity. Good morning, Professor Muhammad Al-Gamal from Qatar. Warmly got from Bali. Nice to meet you, sir, in this perfect situation and condition. I would like to raise a question. Thank you for the presentation material that has been delivered. My question is, how is the 4 levels of control applied during the pandemic outbreak? Thank you.
4 lever or 4 level?
4 lever. 4 levels of control.
Okay, 4 levels of control applied during the pandemic. Okay. Actually, I'm afraid I didn't understand the question properly. You mean that how the government control the crisis, or the control variables affect the pandemic? I didn't understand the question. Sorry for that.
Okay, I have shared the question. I have shared the question on the.
Yeah, I can read it. I read the question, but I don't understand what you mean by 4 lever. What do you mean by 4 lever? This is what I didn't understand.
Like a management control that consists of belief, boundary, domestic, and interactive.
Okay. Yeah, this is a management control. You mean?
Okay. So I have studied about the management control. There is the 4 level of control that consists of belief, boundary, diagnostic, and interactive.
Okay, yeah, now I understand. Thank you. Unfortunately, I cannot answer this question. This is actually this is a pure management accounting question, and actually, unfortunately, I'm a finance guy. I didn't have any empirical studies to. I understand now what you mean by the 4 lever. Yeah, I didn't have any empirical study or even content study for the impact of the 4 lever on how during the pandemic. However, I think there are some studies speak about the policies and the impact of these policies during the pandemic. But I'm not sure the practice of management accounting inside organization. I'm sure that the practice has been changed a lot during the pandemic. But because I didn't do any empirical studies, so unfortunately I have no answer. I cannot answer this question, the main current situation. But maybe Mimba has a better answer to this question compared to me, because I know she is full management accounting person rather than me.
I didn't dare to answer it now, but I'm sure that we could have a very nice discussion during your visit to Bali next year. Yeah, after we have the conference in Jakarta.
Okay,
Then we have
I
a
would
very
like
strong reason to
actually.
invite you.
Do you know what I will take this question. We will have a seminar also in the spring, and
Yes.
this sorry, and also in the summer we will have a ABAMA seminar in summer, and I will move this question to the chair of this conference, because he is a management accounting guy, Professor Ghassem Mardini, and I will ask him to put it to either one of the stream, because this is interesting. What happens to the management accounting during the pandemic? This will be very nice research question. So thank you for this.
Exactly.
Thank you for suggesting that such nice research question. And I promise you, if you follow us actually in the summer webinars, you may find the proper answer. Sorry for being an.
Wow,
Okay, I
amazing.
appreciate it. Thank you, thank you.
Thank you. Okay, now thank you also Nadia and Professor Muhammad. Now we have the other questions, the last question. Sorry, I would say this will be the last question. So please, this is from Mr. Wahyu. Could you please just raise up the question directly, Mr. Wahyu? This is Mrs., but I do believe this is Mr. Yeah, this is just a typo. This is a
Okay, Mr. Muhammad, I want to ask how we measure the magnitude of impact from COVID-19 to the beta risk of stock?
Beta risk.
Thank you.
Okay, this is a very interesting. Yeah, this is a very interesting question. We know that actually beta risk is measured the market risk, and the market risk is a kind of systematic risk, and we believe that COVID affects beta, because COVID is a part of systematic risk which affects the investment and the investor sentiment, and also the investor decisions. So it changes the risk. We have many ways to measure the magnitude of impact of COVID to the beta risk. One of them actually to estimate beta before and after. We can make event study and measure the impact of COVID in beta before and after. But the challenge is, remember, beta is a relative measure for risk. Beta is a covariance between stock prices and index. So we know that beta affect all stocks. So that's mean the index is changed. So what will it change actually? The impact of COVID can be reflected in some sectors more than other sectors. That's why beta can change for some sectors, can increase for some sectors, and can decrease for some sectors. So I believe the best way to do this, applying event study, calculating beta for stocks before the event and after the event, and doing t-test to test the difference in beta, to see if this is significant difference or not. So it's a simple exercise. Of course, there are many other things. I think Peleras had a different methodology to do this, using Bayesian analysis. But I think my way is very simple and straightforward. So just estimate beta, I would say for 5 months or 6 months before the COVID, and 5 months after the COVID, and test the difference between it for every single stock, not for the whole market. So you have to do it for every single stock. I hope this answered your question, Mr. Wahayu. Hello? Hello? You still with me?
Hello, Professor Wahyu.
Okay, yes, thank you.
All right.
Okay, perhaps you cannot hear in a very clearly way, but he said it very thank you to all of your
I heard him. Thank you.
explanation.
Thank you. Yeah, he's welcome.
Okay. Oh no! Wow, 10 questions. Yeah. Oh, for the other participants, and some of them just still also chat me and they would like to raise question, but please accept my sincere apologize for cannot afford the remaining questions due to the time constraints. But this will be a very strong reason for us to invite Professor Muhammad Al-Gamar next year to come to Bali, or on the other way around, we should come and fly to Doha, Qatar and meet Professor Muhammad. Yeah, we will see which one is doable. Okay, amazing, Professor Muhammad. Yeah. All of the 10 difficult questions were answered precisely with full of insight to all of us. Please give our big round of applause again to Professor Muhammad.
Thank you. Thank you.
Yes. Professor Muhammad, now we proceed to the next session. We call it a closing statement. Could you kindly give your closing statement for about 5 minutes? Thank you.
Thank you. First of all, it was a pleasure to be here. This insightful question and discussions, I think they are open my mind for new ideas. The lesson from COVID-19, it was very hard. Every economy has suffered a lot. All financial markets find a lot of turbulence. We cannot assist what happened during COVID-19 until the pandemic finished. Unfortunately, we are not too sure when it will have finished. All we are doing now is just try to do a very early attempt to assess the impact. But you know, if you have a partial assessment, better than nothing. The relationship between energy and gold markets are very important because they are the main financial markets. Most of the investment portfolios are playing in these three markets. Of course, we cannot ignore Bitcoin or currency market. However, we can find that gold still work as a hedge, as a safe haven against equity. Is very clear. However, the way and how strong this hedge strategy depends on the market selected. Regarding the energy market, it looks like it's driven by political events. It's driven by strategies. It's driven by supply policies. So unfortunately, I will not recommend it as a market unless you would like to make a risky investment to make a huge profit. If you are a gamble, it's a nice way to do a gamble. This is my conclusion. Thank you. Thank you.
Okay. Okay, Professor Muhammad. Yeah. So thank you so much for your closing statement. And before we proceed to the next agenda, as the moderator of this session, I would like to say big thanks to all of the participants for joining these international webinars. I also would like to extend our gratitude to Professor Muhammad for sharing your fruitful materials and for answering all of the questions in a very excellent way. I do believe this will be a good starting point for collaboration between the two faculties and universities, because it seems that there are so many possibilities to have a joint research between us. Indeed, yeah, we are not far away anyway, only about 7 hours flying. So let's start to have a collaboration between the two faculty. So the last but not the least here, please give again our big round of applause to Professor Muhammad and all of us. Thank you so much. Thank you.
Thank you. Thank you.
Well, thank you very much, Dr. Mimba, that already led the main session interestingly and very hot discussions. Let's give a big applause again. Well, ladies and gentlemen, the next agenda is certificate appreciations for the presenter and moderator virtually. And this will be delivered by the head of Institute of Indonesian Chartered Accountants, Bali Regions. Dr. Wirokusuma, time is yours.
Okay, thank you very much for the opportunity, for the time that you come from Master of Ceremony, Ibu Asmini, and then for the Professor Muhammad El Gamal. Allow me to say thanks a lot. Thank you very much about your kindness to share your experience before. When I'm really interested with your conclusion that if you are a gambler, can you do the risk one to decision to make an investment? Thank you very much. Okay, and now we would like to share the certificate about your kindness to be a presenter in this event. Here you are, Professor Muhammad El Gamal, as a speaker in international webinar, Price and Volatility Spillovers between global financial markets prior to and during the COVID-19 pandemic. From us, the Accounting Department, Faculty of Economics and Business, Udayana University, with collaboration and IEA region, Bali region. Here you are. Thank you very much.
Thank you.
And
Big
Ibu.
applause.
Like big.
Thank you. Thank you. Thank you. Thank you.
You're welcome. I think it's time to be handed to the MC.
Mr. Wirokusuma, would you kindly please deliver the certificate to the moderator?
Already delivered this already. How to deliver this is from the certificate.
Virtually.
Yes,
Virtually.
Okay, thank you. Already accepted to Professor Muhammad El Gamal.
Thank you. Thank you. So I will receive this by email, isn't?
Yes.
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 Yeah, it's very nice one, actually. Thank you. Much appreciated. I'm proud to receive such a nice certificate, and thank you for being here, and thank you for invitation me for being here.
You're welcome.
And thank you for Member. Actually, she has done a wonderful job. Thank you for the
You're
nice
welcome.
atmosphere, very friendly atmosphere, and I enjoy it. As usual, I'm enjoying to be with you. Actually, very friendly atmosphere, very professional. Not only. And actually, this is a main lesson I always learn in Indonesia: how to be professional and friendly in the same time, which is very kind. Thank you.
Welcome.
Yeah.
Thank you. About us.
It is also my great honor. Thank you, Professor Muhammad, to be your moderator in this session. Thank you, Dr. Wirokusuma. Thank you.
You're welcome, Ibu Mimba.
Thank you, Mrs. Sisi.
Well, ladies and gentlemen, the link of attendance form is already shared in the chat. Please kindly to fulfill the form. Finally, we reached the last sessions, which is photo session. Please kindly on your camera and please keep your sweetest smile because we will have a special several screenshots. Please kindly on your camera, please, ladies and gentlemen. Maybe we'll take several times. 1, 2, 3. Cheers. Maybe we say Bali. Bali. Next slide. What slide that? Yeah, it's still around 400 participants, so this will be takes time for the screenshot. The participants in this last sessions already 470. Thank you for the all participants. The photo session is done. Okay. Well, ladies and gentlemen, finally we would like to say thank you again to Prof. Mohammed that already shared his insight to us, and thank you very much to all of the audience and participants who are joining this event from the beginning till the end of these sessions. And from the deep of my heart, I do and deeply apologize for my mistake while presenting this event. Ladies and gentlemen, thank you very much for your intentions. May God bless all of us. Stay healthy and see you in the next event. Good evening. Thank you very much. Om Santi, Santi, Santi Om. Wassalamualaikum warahmatullahi wabarakatuh. Salam Namo Buddhaya, salam Rahayu, salam kebajikan.
Yeah.
Thank you very much.
Thank you.
Sukron, Professor Muhammad. Sukron. Yeah.
Afwan, Linda.
Thank you also for the all clapping hands that rise by all the participants. Thank you so much for your clapping hands virtually. Thank you.
Yeah,
Thank
thank you.
you. Yeah.
See you next time.
See you next year,
Bye-bye.
Professor Muhammad. Yeah. Thank
See you.
you.
Bye-bye. Bye.
Bye-bye.
Bye.
Bye. Assalamualaikum.
Assalamualaikum.
Waalaikumsalam. Ini ingatkan lagi ngisi link partisipan. Ingatkan lagi. Ingatkan. For participants.
Yeah. For the all participants, please kindly fulfill the attendance form to got the certificate of attendance. Thank you very much.
Bali is an island of tourism that draws attention of the international world by its unique culture, nature and people. Bali is still a popular destination for people to take a vacation and a place for international events to be held. Bali is not just a tourism destination anymore, it is slowly changing into an educational destination for people to study abroad. And that is why we at the Faculty of Economics and Business at Udayana University have a target to become a world-class university in which can cover the demands of people who want to learn the economic and business study whilst attaining learning about culture and business traits in Bali and Indonesia. The Faculty of Economics and Business is the second largest faculty within Udayana University, and it is the leading economics and business school in Bali. There are two main campuses that accommodate students for study activities, both local and international students, located in Jimbaran and Denpasar campuses. The Faculty of Economics and Business provides a range of management courses suited for bachelor degrees, master degrees, and doctoral degrees that focus upon three main concentrations of study, which are the schools of management, schools of accounting, and schools of economic studies. Also, it provides a range of professional courses and short courses, which are diploma degrees, accountant profession courses, IBSN or International Business System Network courses, and also night class courses. This is to ensure students are able to master the distinct field of study that can create effective competitiveness within the current global business environment. The management courses specifically provide a detailed approach to how managing people, organizations, companies, and multinational companies from a unique cultural distinction based on Indonesia's proficiency and also adaptability to the ever-changing demand of global management practices. From this, the faculty has created specific educational programs that help to develop a deeper understanding of knowledge, practices, and also the evolution of competitiveness in comparison to other universities within the island, the country, the region, or even internationally. The curriculum at the Faculty of Economics and Business in Udayana University is designed to a level of education that matches current knowledge bases, technology advancement, and specific techniques that are applied in the current working environment. The studying program is distinguished into core subjects,